But the big headline that came through post-market hours on Friday, the RBI on Friday announced it wants to withdraw all 2,000 rupee notes and directed persons having these notes to exchange them or deposit them in their accounts as this cash comes back to the banking system. What may be the impact? Latha is here with the editor's take. Latha, there was so much hoo-ha. People were scrambling around to understand what this means. But we've had some time to study it. So what's your take?
Well, first of all, it's just a withdrawal of notes. It's not being cancelled as legal tender. So it's valid, though people will not accept it in shops. But you can exchange it without any identity card. The more important part is what is the impact for markets at this point in time in Bazaar. That's what we have to look at. Last time around, it was a lot of money when it was 1,000 and 500 rupee notes. It was some 15 lakh crore that was pulled out. This time, it is 3.62 lakh crore of 2,000 rupee notes. Now, what is the calculation? Even if half of that comes and stays, then there is going to be a lot of improvement. Remember, many people will exchange. So let us assume half comes, then the system liquidity can improve. But economists are extremely divided. There are estimates as low as 10% only will stay back because people will put it out. And there are estimates as high as 50% also. But it's quite possible that closer to 50% stays for some time. Now, what impact does it have? Immediately, short-term rates will go down because the market was in a tight liquidity spot. There were other things that happened. The Reserve Bank did a VRR, what you call a variable rate repo, whereby it puts in 50,000 crore for 14 days. And there was a bond redemption as well of 66,000 crore. So all told, you're going to see one-day money to short-term money, one-year T-bills, all of them yields falling. Now, whether it will reach the final yield curve is a little unlikely because the Reserve Bank dividend of 87,000 crore turned out to be a disappointment. The market was expecting, over 1 lakh crore. So maybe the entire yield curve is not going to benefit much. It's not as if the government is going to borrow less. Now, banks, I think the impact would be interesting. The chances are that even if this money stays for a couple of quarters, say, then at least for 2 quarters, banks don't have to raise deposit rates. So whereas everyone said Q4 is net margins have peaked, now you'll perhaps extend that same margin calculation to this quarter as well. So there could be a positive for bank stocks. Let's see how things pan out on the CRR front. A CRR cut was expected second half of the year. That may now get pushed.
All right, Latha, thanks a lot for that. An important story, an evolving story, but at the end of the day, we all know it's still legal tender, so there's absolutely no need to panic for that.
One more thing that people are talking about. I thought the equity analysts will talk about it. If people have a lot of money and they don't want to give it back, they may end up buying gold or consumer durables. So there is a bit of an expectation that gold jewelry sales may go up.
Absolutely. I think our commodities editor Manisha Gupta is going to take that forward with greater detail later on. So do stay tuned in for that. But thanks, Latha, for joining in.